Welcome to Topical Economics. If you are new here, don't forget to subscribe and hit the bell icon so you never miss any of our insightful videos on key economic concepts. In today's video, we're diving into the topic of firms and production. I'll be walking you through some past paper multiple-choice questions, carefully analyzing each one to explain why the correct answer is what it is. Whether you're preparing for exams or just want to strengthen your understanding of economics, this video will help you get to grip with important concepts in a clear and practical way. So, let's get started. Starting with the first question. Germany is labor-intensive economy. Considered a capital-intensive economy, while Indonesia is considered a. What does this mean about the economies of Germany and Indonesia? A, capital is relatively cheaper than labor in Germany, while labor is relatively cheaper than capital in Indonesia. B, Germany has many primary sector workers, while Indonesia has many tertiary sector workers. C, Indonesia has a higher growth in its population size than Germany. D, relatively more low-cost labor is available in Germany while capital is more efficient than labor in Indonesia. Reference, 2022 May-June version 2. The correct answer for this question is option A. Capital is relatively cheaper than labor in Germany, while labor is relatively cheaper than capital in Indonesia. This statement correctly reflects the distinction between capital-intensive and labor-intensive economies. In a capital-intensive economy, like Germany's, there is a heavy reliance on machinery, technology, and other forms of physical capital to drive production, meaning capital is relatively cheaper compared to labor. This is because Germany's economy has advanced infrastructure, automation, and a highly skilled workforce, which reduces the need for large numbers of workers. On the other hand, Indonesia is considered a labor-intensive economy, where human labor is more abundant and less costly than capital. In this context, production tends to involve more workers and fewer machines or advanced technology, since labor is cheaper and more readily available. Looking at the other options, B, Germany has many primary sector workers while Indonesia has many tertiary sector workers, is inaccurate. Germany is a highly industrialized and service-oriented economy, with a significant proportion of its workforce in the secondary, manufacturing, and tertiary, services, sectors. Indonesia, however, has a larger share of its workforce in the primary sector, particularly agriculture. C, Indonesia has a higher growth in its population size than Germany, may be true, but population growth is not directly related to whether an economy is capital or labor-intensive. This option does not address the core economic structure of the two countries. Finally, D, relatively more low-cost labor is available in Germany while capital is more efficient than labor in Indonesia, is incorrect because it reverses the roles of labor and capital in the two economies. In Germany, labor is relatively more expensive compared to capital, and in Indonesia, capital tends to be less accessible, making labor relatively cheaper. Moving to question 2. The development of artificial intelligence in machines raises the productivity of capital. What will be the effect of this? A, the costs of production will increase. B, the demand for capital will increase. C, the price of capital will fall. D, the supply of capital will decrease. Reference, 2022 May-June version 1. The correct answer for this question is option B. The demand for capital will increase. As artificial intelligence (AI) is integrated into machines and technology, it significantly enhances the productivity of capital. This means that capital, such as machinery, equipment, and technology, becomes more efficient and productive. As a result, businesses are likely to demand more capital to take advantage of these advancements in AI, leading to an increase in the demand for capital. Analyzing the other options. Option A. The costs of production will increase. Is unlikely in the long run. While the initial investment in AI-enabled capital may be high, over time, AI can reduce operational costs by increasing efficiency, automating tasks, and improving productivity. Therefore, the overall costs of production are more likely to decrease rather than increase. Next, option C. The price of capital will fall. Is not necessarily true. If demand for AI-enhanced capital increases, the price of capital might rise due to the higher demand for these advanced technologies and machines. The price could fall only if there is a significant increase in supply or mass production, which is not directly stated in the scenario. Lastly, option D. The supply of capital will decrease. Is also unlikely. If anything, the supply of capital may increase as more firms invest in AI technologies and develop new machines, but the scenario does not indicate a decrease in the supply of capital. Moving to question 3. What could cause an increase in demand for a factor of production? A. Decrease in the efficiency of the factor of production. B. Decrease in the price of an alternative factor of production. C. Increase in the demand for the good or service produced. D. Increase in the price of the factor of production. Reference, 2022 May-June version 1. The correct answer for this question is option C, increase in the demand for the good or service produced. The demand for a factor of production, such as labor, capital, or land, is derived from the demand for the goods and services that factor helps produce. If the demand for the final product increases, businesses will need to produce more of it, which in turn requires more of the factor of production used in its creation. For example, if there is a rise in consumer demand for a product, companies may need to hire more workers or purchase more machinery to increase production, thus increasing the demand for the relevant factors of production. Analyzing the other options. Option A, decrease in the efficiency of the factor of production. If the efficiency of a factor of production decreases, it would generally make that factor less valuable and less productive. This would likely lead to a decrease in demand for that factor, not an increase. Next, option B, decrease in the price of an alternative factor of production. If the price of an alternative factor of production, for example, labor versus capital, decreases, businesses may shift their use to the cheaper alternative. This could decrease the demand for the original factor, rather than increase it. Lastly, option D, increase in the price of the factor of production. An increase in the price of a factor of production typically leads to a decrease in the quantity of that factor demanded, as businesses may look for substitutes or reduce their use of that factor to lower costs. Moving to question 4. Labor-intensive sectors are the main contributors to Vietnam's economic growth. What does this reveal about Vietnam's economy? A. Availability of labor in Vietnam is low. B. Demand for products from labor-intensive sectors is low. C. Price of labor in Vietnam is high. D. Production of goods and services in Vietnam is mainly dependent on labor. Reference, 2022 February-March version 2. The correct answer for this question is option D. Production of goods and services in Vietnam is mainly dependent on labor. When labor-intensive sectors are the main contributors to a country's economic growth, it means that the production of goods and services in the country is heavily reliant on human labor rather than on capital, technology, or machinery. In such economies, sectors like agriculture, textiles, manufacturing, and some service industries tend to employ large numbers of workers to drive economic output. Therefore, Vietnam's economy depends on the availability and use of human labor in these sectors for its growth. Analyzing the other options. Option A, availability of labor in Vietnam is low, is incorrect. If labor-intensive sectors are central to economic growth, it implies that there is an abundant supply of labor, not a shortage. Countries with low labor availability typically do not have labor-intensive sectors as major contributors to their economy. Next, option B, demand for products from labor-intensive sectors is low, is also incorrect. If labor-intensive sectors are significant contributors to Vietnam's economic growth, it suggests that the demand for the products or services these sectors produce is high, driving growth. Lastly, option C, price of labor in Vietnam is high, is unlikely. In labor-intensive economies, the price, or wage, of labor is generally lower compared to capital-intensive economies, because the economy relies on a large, inexpensive workforce. If labor were expensive, the economy would tend to move towards more capital-intensive methods. Moving to question 5. What is an advantage of labor-intensive production and what is an advantage of capital-intensive production? Reference, 2021 October, November, version 3. The correct answer for this question is option A. One key advantage of labor-intensive production is that each item can be individually made. This is often true in industries where customization or craftsmanship is required. For example, in certain artisanal or specialized manufacturing sectors, workers can make each product to a unique specification, providing flexibility in production. This is a clear advantage over highly automated production systems, where mass production and standardization are the focus. Additionally, workers have pride in the product because they are directly involved in its creation, contributing to the quality and individuality of the final output. While it can be more time-consuming and labor-intensive, the ability to customize each item makes it valuable in industries that prioritize quality and uniqueness. For capital-intensive production, the primary advantage is that average costs of production are low. Once a company has invested in machinery, equipment, or technology, these assets can produce large quantities of goods at relatively low incremental cost. This results in economies of scale, where the cost per unit of output decreases as production increases. Capital-intensive production is ideal for industries that need to produce large volumes of standardized products, like automobiles or consumer electronics, where automation and machinery can efficiently meet high demand. While the initial fixed costs are high, due to purchasing and maintaining the machinery, the long-term savings from lower variable costs and increased output make capital-intensive production highly cost-efficient. Moving to question 6. The table shows the output of cakes from 4 bakeries, A to D. Which bakery has the highest labor productivity? Reference, 2021 October, November, version 3. The correct answer for this question is option B. To determine which bakery has the highest labor productivity, we need to calculate the output per hour of labor for each bakery. Labor productivity is calculated by dividing the total output, cakes produced, by the number of labor hours worked. For Bakery A, with 10 hours of labor and 40 cakes produced, the labor productivity is 40 divided by 10 is equal to 4 cakes per hour. Bakery B, with 40 hours of labor and 640 cakes produced, has a labor productivity of 640 divided by 40 is equal to 16 cakes per hour. In Bakery C, where 50 hours of labor result in 750 cakes, the productivity is 750 divided by 50 is equal to 15 cakes per hour. Lastly, Bakery D produces 500 cakes with 100 hours of labor, which results in a productivity of 500 divided by 100 is equal to 5 cakes per hour. Based on these calculations, Bakery B has the highest labor productivity, producing 16 cakes per hour, which is greater than that of the other bakeries. Moving to question 7. The size of the domestic car industry in Japan has enabled Japanese car producers to be more price competitive than rival car producers. What is an explanation for this? A. Economies of scale are present in the Japanese car industry. B. Managerial problems exist in the Japanese car industry. C. Productivity is low in Japan. D. The Japanese car industry is very labor-intensive. Reference, 2021 October-November, version 1. The correct answer for this question is option A. Economies of scale are present in the Japanese car industry. When the size of an industry is large and producers are able to produce goods in large quantities, they can often reduce the average cost of production per unit. This is known as economies of scale. In the case of Japan's car industry, the large domestic market and extensive production capabilities enable car producers to spread their fixed costs over a larger output, reducing per-unit costs. This allows Japanese car manufacturers to be more price competitive compared to rival car producers in other countries. Analyzing the other options. Option B, managerial problems exist in the Japanese car industry, is not a relevant explanation for why Japanese car producers are more price competitive. Managerial problems would likely hinder efficiency, not improve price competitiveness. In fact, good management practices in large industries typically contribute to economies of scale. Next, option C, productivity is low in Japan, is incorrect. Japan is known for its high levels of productivity, particularly in industries like automotive manufacturing. Low productivity would lead to higher costs, making it more difficult to compete on price. Lastly, option D. The Japanese car industry is very labor-intensive. While there is labor involved, the Japanese car industry is actually more capital-intensive and technology-driven, with a focus on automation, robotics, and highly efficient production processes. A labor-intensive industry would not necessarily be more price competitive, especially if labor costs are high. Moving to question 8. What will increase the demand for labor in an industry? A. A decrease in labor productivity in that industry. B. A decrease in the demand for the good made in that industry. C. An increase in labor productivity in that industry. D. An increase in wages in that industry. Reference, 2021 October-November, version 1. The correct answer for this question is option C, an increase in labor productivity in that industry. Means that workers can produce more output per hour of work. As productivity increases, the marginal productivity of labor rises, which makes it more valuable for firms to hire more workers. When labor becomes more productive, businesses are typically willing to hire more labor, as the increased productivity leads to greater output, higher profits, and the need for additional workers to meet demand. Analyzing the other options. Option A. A decrease in labor productivity in that industry. If labor productivity decreases, each worker is producing less output per hour of work, which makes labor less valuable to firms. This would typically lead to a decrease in the demand for labor, not an increase. Next, option B. A decrease in the demand for the good made in that industry. If the demand for the goods produced in an industry decreases, firms will likely produce less, which could lead to a reduction in the demand for labor in that industry as well. A decrease in product demand generally reduces the need for workers. Lastly, option D. An increase in wages in that industry would not necessarily increase the demand for labor. In fact, if wages increase too much, it could make labor more expensive for firms, leading to a reduction in demand for labor, as firms may look for ways to reduce costs or substitute labor with capital. Moving to question 9. How would advertising a good result in a retail firm increasing its market share? A. It will improve the personal service in its shops. B. It will increase the firm's costs. C. It will reduce demand for competitors' products. D. It will result in diversification in the firm. Reference, 2021 May-June version 3. The correct answer for this question is option C. It will reduce demand for competitors' products. Advertising a good can help a retail firm increase its market share by attracting more customers to its products and away from competitors. When customers are persuaded by advertising, they are more likely to choose the advertised product over alternatives, thus reducing demand for competitors' products and increasing the retailer's share of the market. Analyzing the other options. Option A. It will improve the personal service in its shops. Advertising itself doesn't directly affect the quality of service in the shops. While it may drive more traffic to the store, improving personal service would require other actions, like employee training or changes in store policies. Next, option B. It will increase the firm's costs. While advertising does increase costs in the short term, it is not necessarily a direct result of increasing market share. The key point here is that the advertising can lead to a greater volume of sales and ultimately higher revenue, potentially offsetting those costs. Lastly, option D. It will result in diversification in the firm. Advertising doesn't inherently lead to diversification, which is a strategy of entering into new markets or offering new products. Advertising typically focuses on promoting existing products or services, not diversifying the product range. Moving to question 10. The managers of a firm have to discuss the following topics. Which topic is least likely to be directly affected by the government's influence on the firm? A. Health and safety laws. B. Replacing one of its managers. C. The interest it pays on borrowed money. D. The minimum wage it must pay its workers. Reference, 2020 Specimen version 1. The correct answer for this question is option B. Replacing one of its managers is least likely to be directly affected by the government's influence. The decision to replace a manager is typically an internal decision made by the firm's board or management team based on the company's needs, performance, and goals. While labor laws and corporate governance rules might indirectly impact how such decisions are made, the specific choice of replacing a manager is not directly influenced by government policies. Analyzing the other options. Option A, health and safety laws. Governments set health and safety regulations to ensure that businesses meet certain standards to protect employees and the public. These laws directly impact how firms operate, what safety measures they must implement, and how they handle risks in the workplace. Next, option C. The interest it pays on borrowed money. The government can influence interest rates through monetary policy, example, setting benchmark rates like the federal funds rate or Bank of England base rate. This affects the cost of borrowing, so the interest a firm pays on its loans is indirectly influenced by government policy. Lastly, option D. The minimum wage it must pay its workers. Governments set minimum wage laws that directly determine the lowest amount of compensation a company is legally required to pay its workers. This affects labor costs and is therefore directly influenced by government legislation. Moving to question 11. The table shows total fixed and total variable costs at different levels of output for a firm. At which level of output is average total cost lowest? Reference, 2020 May-June version 1. The correct answer for this question is option D. To determine at which level of output the average total cost, ATC, is lowest, we need to calculate the ATC at each level of output. The ATC is calculated by dividing the total cost, which is the sum of total fixed costs and total variable costs, by the output. In this case, the total fixed costs, TFC, are constant at $1,200 for each level of output. On calculating, we can see that the average total cost is lowest at 400 tons, where the ATC is $12 per ton. Therefore, the level of output at which average total cost is lowest is 400 tons. Moving to question 12. The wage of labor in a firm increases. What is the most likely effect on the production process? A. Capital replaces labor immediately. B. Capital replaces labor in the long run. C. Labor replaces capital immediately. D. Labor replaces capital in the long run. Reference, 2020 May-June version 1. The correct answer for this question is option B. Capital replaces labor in the long run. When wages, the cost of labor, increase, firms often look for ways to reduce their reliance on expensive labor. In the long run, firms may invest in more capital-intensive methods of production, example, machinery, automation, technology, to replace labor and reduce costs. This process takes time because it involves acquiring new equipment, retraining workers, or reconfiguring the production process. Analyzing the other options. Option A. Capital replaces labor immediately. Is unlikely because the transition to using more capital takes time. It's not something that happens immediately, as firms may need to invest in new equipment and technologies, which involves planning and significant capital expenditure. Next, option C. Labor replaces capital immediately. Is not a typical response to higher wages. When labor becomes more expensive, firms are more likely to reduce labor usage, not increase it, and shift towards capital-intensive methods. Lastly, option D. Labor replaces capital in the long run. Is also not the expected response. Typically, firms move toward more capital-intensive production methods when labor costs increase, rather than the opposite. Moving to question 13. What is most likely to lead to an improvement in labor productivity in an industry? A. An increase in capital investment. B. An increase in income tax rates. C. An increase in the demand for the industry's product. D. An increase in the number of firms in the industry. Reference, 2020 May-June version 1. The correct answer for this question is option A. An increase in capital investment typically leads to an improvement in labor productivity. When firms invest more in capital, such as machinery, technology, or equipment, workers are often able to produce more output per hour worked. This is because they have better tools, more efficient technology, and can automate certain tasks, making the production process more efficient. Analyzing the other options. Option B. An increase in income tax rates generally do not directly affect labor productivity. They may reduce disposable income for workers or profitability for firms, but they do not have a clear mechanism for directly improving labor productivity. In fact, higher taxes might even discourage investment in training or capital that could enhance productivity. Next, option C. An increase in the demand for the industry's product. While higher demand can lead to increased production, it does not necessarily improve labor productivity. Higher demand may encourage firms to hire more workers or extend hours, but it may not directly lead to more efficient use of labor. Productivity typically improves through better processes, tools, or training rather than simply increased demand. Lastly, option D. An increase in the number of firms in the industry. More firms entering the industry could increase competition, but it doesn't automatically lead to higher labor productivity. Increased competition might push firms to improve efficiency over time, but it is not the primary factor driving immediate improvements in productivity. Moving to question 14. Saudi Arabia specializes in oil extraction and refining. This is a capital-intensive industry with highly skilled labor. What might be a disadvantage of this specialization? A. Oil companies have increased training costs as each worker needs many different skills. B. Oil companies may find it difficult to achieve economies of scale. C. Resource allocation is not efficient because a narrow range of goods is being produced. D. Workers may face a restricted range of job opportunities. Reference: 2020 May-June version 2. The correct answer for this question is option D. Workers may face a restricted range of job opportunities. Saudi Arabia's specialization in oil extraction and refining is capital-intensive and requires highly skilled labor. One potential disadvantage of this specialization is that workers may develop skills that are very specific to the oil industry, limiting their ability to find work in other sectors. If the oil industry faces downturns or workers decide to move to other regions or industries, their highly specialized skills may not be as transferable, resulting in fewer job opportunities outside the oil sector. Analyzing the other options. Option A. Oil companies have increased training costs as each worker needs many different skills. While oil companies may require workers to have specialized skills, it's more likely that these companies focus on specific skill sets rather than requiring each worker to have many different skills. The costs of training may be significant, but it doesn't directly result from the industry's specialization. Rather, it's a function of the specific requirements for those working in the industry. Next, option B. Oil companies may find it difficult to achieve economies of scale. Is not likely because the oil industry is capital-intensive and large-scale operations are often key to achieving economies of scale. In fact, oil companies generally benefit from economies of scale due to the high fixed costs involved in extraction and refining processes. Larger companies can produce more at lower average costs, which is why economies of scale are typically seen in the oil industry. Lastly, option C. Resource allocation is not efficient because a narrow range of goods is being produced. Specializing in oil extraction and refining doesn't inherently mean that resource allocation is inefficient. While it is true that focusing on one industry limits diversification, it does not necessarily lead to inefficiency, especially if the country has a comparative advantage in that industry. Efficient allocation depends on how well resources are used within that industry. Moving to question 15. Which statement proves there has been an increase in productivity for a factory making tractors? A. 10% more workers results in a 10% increase in tractors produced each week. B. Output per worker increases from 3 tractors to 4 tractors per month. C. Production increases as more workers are hired. D. Starting a night shift leads to an increase in production of 10 tractors a day. Reference: 2020 May-June version 2. The correct answer for this question is option B. Output per worker increases from 3 tractors to 4 tractors per month. An increase in productivity refers to producing more output with the same or fewer inputs. In this case, the statement that output per worker increases from 3 tractors to 4 tractors per month directly demonstrates an improvement in productivity, as each worker is now producing more tractors in the same amount of time. This is a clear indicator of increased labor productivity. Analyzing the other options. Option A, 10% more workers results in a 10% increase in tractors produced each week. Indicates that the factory is increasing its output by hiring more workers, but it does not necessarily show improved productivity. It suggests that the factory is simply increasing the number of inputs, workers, and output in proportion. An increase in productivity means getting more output from the same or fewer inputs, not just increasing inputs. Next, option C, production increases as more workers are hired. Shows an increase in production, but it does not necessarily imply higher productivity. Hiring more workers increases output, but if the output increase is just proportional to the number of workers added, then it doesn't indicate that each worker is producing more efficiently. Lastly, option D, starting a night shift leads to an increase in production of 10 tractors a day. Shows an increase in production due to adding more shifts, but it does not indicate an increase in productivity. Productivity refers to the amount of output per unit of input, like per worker or per hour worked, not just an increase in the total output through more working hours or shifts. Thank you for watching this video. I hope the explanations of past paper questions and the reasoning behind the correct answers helped clarify some key concepts. If you found this video useful, please don't forget to like, comment, and subscribe to Topical Economics for more insightful lessons and exam tips. Your support is truly appreciated, and it encourages me to keep creating valuable content to help you succeed. Feel free to leave any questions in the comments, and I'll be happy to assist. Thanks again for being a part of the Topical Economics community.